The Shiba Inu ecosystem just underwent a radical shift in supply dynamics, and it's not just about price. In the past 24 hours, over 27 million SHIB tokens were permanently removed from circulation, marking a 1,034% surge in the daily burn rate. That's not a typo. What was once a steady trickle of token destruction has exploded into one of the most aggressive SHIB burn spikes in recent weeks, pulling nearly 27.1 million tokens out of the market in a single day. Data from the official SHIB burn portal confirms that daily burn volume jumped from just 2 million on May 14 to over 25 million within 24 hours. The exact figure, 27,137,162 SHIB burned. That's one of the largest single-day totals in weeks. The weekly burn count now exceeds 46.1 million, and over the past month, nearly 198.1 million tokens have been destroyed. Each burn transaction permanently reduces the circulating supply, a core mechanism in Shiba Inu's tokenomics designed to introduce deflationary pressure. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The velocity of this SHIB burn spike suggests a coordinated or incentivized push, possibly tied to community campaigns or behind-the-scenes shifts in holder strategy. Each burn transaction permanently reduces the circulating supply, a core mechanism in Shiba Inu's tokenomics designed to introduce deflationary pressure. Unlike automatic burns, SHIB burns are often driven by community initiatives, where holders voluntarily send tokens to irrecoverable addresses to reduce overall supply and increase scarcity. Meanwhile, exchange reserves of SHIB have dropped to their lowest levels this year. That's significant. When tokens leave exchanges, they're typically being moved to private wallets, often by large holders or whales. This dual movement, burning tokens and withdrawing them from exchanges, tightens the available market supply on multiple fronts. Less supply on exchanges means lower liquidity, which can amplify price volatility. A smaller float makes it easier for large trades to move the market, both up and down. The important part is not just the burn itself, but what it reveals about incentives. A sudden spike in SHIB activity could signal growing confidence in the ecosystem's long-term roadmap, particularly as the community awaits the Leash v2 update, still in active development with external audits and an open testnet phase planned. But here's the catch. The Shiba Inu team has clarified that official burn updates come only through the project's website, and they've warned against unverified claims of private sales or exclusive distributions. That means investors need to distinguish between organic community momentum and potential misinformation. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. So what's the real takeaway? The SHIB surge is more than a headline, it's a stress test of tokenomics in action. The mechanism is clear. Reduce supply, increase scarcity, potentially support value. But the uncertainty lies in whether this momentum is sustainable or if it's a short-term signal driven by sentiment. The next critical signal will be whether this burn rate holds or if it fades once the current wave of activity subsides. For now, the market isn't just watching price. It's watching how supply, whale behavior, and community trust evolve together.